What is good, guys? It's Krabby Trades here. Welcome to another video. Today I just want to go over my market approach for 2026. It's been a crazy start to the year. I'm at $277,000 about there in payouts and withdrawals this month. Pop them up on the screen. And I have another 200,000 unrealized in my Top Step Live accounts, my TPT accounts, and all kinds of accounts that I'm currently trading on. And today I just want to do a quick recap of essentially what I look for on a day-to-day basis. So let's get right into it. So we want to start off on the chart here. Of course, every single morning I will look at all these time frames, internals and externals, maybe new week opening gaps, and I'll essentially look for order flow. So it might not be the order flow that you guys are usually used to, but this one is more so advanced market structure. I'll look for two phases in price. The first phase is a rebalance phase, and the second phase is the distribution phase. When I'm looking to trade in the morning or maybe PM session or whatever I'm looking to trade, what price sequence am I currently in? So we can even take this price for an example, and we know that, okay, off of a manipulation internally, we're always gonna look for a rebalance lower, right? So once you have that rebalance lower, you can then start applying we call multi-time frame alignment. So what is multi-time frame alignment? Essentially, you'll have a multi-time frame fair value or imbalance aligning in the same area and same price range, etc., right? So we can take this chart for an example, and let's see if we have one in this internal here. Now, the fair value gaps I personally love to take are the ones closest to structure, and it's always the first pullback high after manipulation or off of a buy sequence, distribution, whatever the case may be, right? So in this case, let's mark out this fair value here, and let's see if we have a multi-time frame alignment. So we have a 30-minute fair value here. We have a 1 hour fair value that we didn't tap into. We have a 2 hour fair value. We have a 4 hour fair value, and we also have a 15, which both of these did get tapped into. So this, my friends, will be my POI. It's called point of interest. Now, what is point of interest? Point of interest is essentially where you want your model to form on your day, on your week, etc., right? And it's the lowest point price possibly should retrace, or you're looking to obviously reverse off of a certain area, right? And we like to call it point of interest. This is my point of interest. So when I have a point of interest developed internally, I can then go to the lower time frame and start applying the models. If you guys do want a new video on the models, I can obviously show you exactly what I look for, even model wise. So we know that this is my point of interest, and we both know that I'm bullish, right? Based off order flow. We'll go over order flow as well. We can obviously apply a fair to seek low or some sort of SMT internally. We have that manipulation at the high, and then we have that for value that got created later on in that day. And now we're looking for upside, as you guys know. So we created a new swing high at around 412, and we created a reversal model at about 1:26 p.m., right for PM session. For PM session here, you have a fair to seek or SMT, depending on what you trade. You had your change in order flow back higher for advanced market structure wise. And then you had, of course, your fair value to premium sequence, which would be right here, followed by a balanced price range. A balanced price range is two fair values that overline internally, one off of a distribution down and another up, obviously. That leaves these two fair value gaps overlapping. So once we have that overlapping in fair value, you can then obviously look for your entry. Your stop should be a swing low, and then your target should be this internal high here. Now let's drag it and see if the stop did get taken. And no, so the stop did not get taken. Let's see if we snag the high here. And there you guys go. So these are the type of positions I usually like to take. This one might have taken a little longer due to price being at around 1 p.m. Now, where do I tend to go break even? Break even, I tend to go PT1, maybe even PT2, or off of a very strong buy sequence. So here, would I have been trailing? Absolutely, right? So you could obviously look for a second attempt later the next day or during Asia if you need. Now, studying order flow. What is order flow? Essentially, order flow is when price has a clear trend in a buy sequence or a sell sequence with price rebalancing in for values or order blocks or wherever you honestly like to trade at that point. Second tab, order flow basics. What is order flow basics? So remember, price provides two easy ways to identify what sequence we're in. So as you guys can see, we have a rebalance phase here. So price will essentially retrace to then distribute lower. And then we have your distribution phase, which is the phase I personally look to trade preferably every day, because you'll have more momentum less drawdown, more efficient, clean price, right? So rebalancing phase, price fills for value gaps and efficiencies. Distribution phase or displacement phase, whatever you want to call it, price drives into draw/liquidity. SMT aligning order flow. Now, SMT aligning order flow is if one index makes a higher high while another index obviously does the opposite, right? So see which side is actually distributing orders. Instead of looking at just NQ, you can look for pairs, NQ and ES. This prevents chasing fake order flow sequences that lack real conviction. How would that look on a chart? It would be something like this. So SMT helps confirm which phase you're actually in. If divergence shows weakness here at the low or at the high, you'll essentially look to rebalance. If the alignment shows strength, you'll look to distribute into obviously drawn liquidity. Why is order flow important? Well, the reason order flow is very important is because it helps you identify overall market trend, overall market bias, and overall draw, which are the three major things in price that we look for. A common mistake traders make when applying a reversal model, like the reversal model or the Rev model or the 2022 model, in the wrong context, of course, you'll look for an example like this one right here. They'll try to use a bullish reversal setup inside of a bearish order flow sell sequence on the higher time frame. So the best type of reversals are for you to take when your lower time frame is bearish, but your higher time frame is bullish, which is the rebalance phase. Off of the rebalance phase, you'll look for that reversal model, and those are the ones that usually align. So you want the lower time frame to align with the higher time frame, which obviously should make a lot of sense. How would that look internally here? Same chart, same everything. Your previous, obviously, reversal model here did not play out, which is fine, but this one did. Why? Because this one follows your order flow sequence. So you had a fair to seek, your change in order flow, and this is a ideal reversal model for the lows, right? The best reversals don't come from forcing a setup against higher time frame order flow. They come when lower time frame shows a switch in order flow to the upside, and that shift indicates a reversal. So when all time frames are in sync, the quality of the reversal will be night and day difference. Of course, a switch in order flow. Another example is when price, in this case in the daily, is rebalancing on the higher time frame. So you have 3 red consecutive days, and then you're finally rebalanced, and now you're looking to distribute higher and change your order flow. So where would your point of interest be? Around this area, and it might take a little time for it to form in the lower time frame. But now once you have that buy sequence and change in order flow, you should be clear for the high here, right? So once the rebalancing completes, the higher time frame begins to react, leading a shift on the lower time frame. I'll show an example of this obviously on the next slide. So those same point of interests, you can align them. Everything on the lower time frame here, for example, this 5-minute reversal model shows a shift in order flow where I'm hovering over my mouse that perfectly lines up with the point of interest, like I said again. Now, which ties us into multi-time frame alignment. Now, what is multi-time frame alignment? So multi-time frame alignment is when price has multiple imbalances or inefficiencies sitting in one area. So in this case, you have a 4-hour chart, you have manipulation at the low, you have your distribution after a little manipulation in the lower time frame with a buy sequence above, leading you with a 4-hour for value. Now we should have a stacked for value here off a closure. There you go. And this is what I mean by the previous structured high, in case you were wondering. So previous structured high here, there's your rebalance, there's your distribution. So that's 2 multi-time frames alignment. This is number 3. This is your 30-minute, same alignment, and you have manipulation with a inversion for value gap. Again, another multi-time frame alignment. This is a higher time frame at the low here. This is your fair to seek, your change in order flow, and this is your higher time frame point of interest, which now leaves you into a perfect reversal model for the high. So remember, these multi-time frame alignments are very, very good. Now this is your 1 minute here. Your 1 minute has the model. I like to personally take my trades in the 1 minute here. So you have your fair to seek, your manipulation, your change in order flow, inversion for value gap, rebalance, maybe a BPR sitting in between. And as you guys can see, you instantly shot for the high here, which is literally exactly why I trade multi-time frame alignment. Now, creating an A+ model sequence usually goes like this for myself, right? So in the morning, I will always look for draw/order flow. So number 2 can be multi-time frame alignment, MTF. So multi-time frame alignment is where you find your point of interest to then displace higher or reverse or continue, whatever you're looking to trade off of, right? Number 3 will obviously be price. How are we moving? Are we efficient? Are we clean? So I'll always look at if we're displacing well, or if we're rebalancing well, are we chopping? Are we stuck inside of a range, etc., etc. So draw, order flow, multi-time frame alignment, price, okay? So Now, once you have everything aligning, you'll have your point of interest, where you want the model to form, okay? Now, once you identified your point of interest, you can then look on the lower time frame for two models that I personally use, a reversal model or a continuation model. So both of these models are for any types of conditions. So the continuation model can be in super harsh conditions, as in super volatile, maybe even slower, choppy. You can always still find a continuation model. A reversal model is a little more rare because you want the lower time frame to align with the higher time frame off the reversal, which is essentially what we look for off of a sell sequence into a distribution. So that distribution there will come off of your point of interest, which is your rebalance. Then of course, risk management, right? So how much are you willing to risk? You should always be risking a dollar amount, not be looking for your stop based off the points of the chart. Points are relative. The reason being is volatility changes. Sometimes one pullback can be 10 points, it can be 100 points. So when volatility changes, so does your sizing, but your dollar amount should stay always the same. If you want to size for $500, you size 10 micros. If you want to size for $250, you size 5. The points doesn't matter. As long, even if it's a 100-point stop, if your stop is always $500, you are fine. You're doing a great job. Now, once you have the risk management, you know your entry and your exit, of course, scales, etc., trailing. Those obviously come with a little more experience and a little more time. I can do all kinds of videos on those if you guys like it. But that is so far how I build my daily outlook every single morning while trading. If you guys have any questions, please put them in the comments. And yeah, thank you guys so much for watching. Peace out. If you guys are wondering how you can get a hold of these tabs and where they came from, I personally made them myself. They're very informative and they're all stack by stack. Of course, I have videos going over everything as well. This is also the brand new 2026 education tab, from advanced market structure to every single thing you can possibly need to help you move forward in your trading career or whatever the hell you're looking to do. Everything will be brand new and refreshed. So I'm super happy of where my Discord is currently heading, hoping I can help everybody, no matter if you're in it or not. But if you guys want to learn more, of course, the link will be in the description. Thank you guys.